Hey guys, how's it going? It's Andy from MagooInvesting. Happy Tuesday. In this video, I'm going to talk about 3 different topics. And I thought it'd be kind of better to talk about a variety of topics that I can go give a better summary of them instead of trying to drag on for 10 minutes about one topic. So if there's a topic about the stock market or just a company in general you'd like me to go over, please leave it in the comment section down below and I'll get to it as soon as I can. In today's video, we're going to be discussing the huge stock market drop that we had on Monday, and then I'm going to talk about some problems that I've been seeing with the media coverage of the stock market, and then finally I'm going to go back and do an analysis of Chesapeake Energy, ticker symbol CHK. Before we get started, I got to say that I'm not a licensed financial advisor and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Okay, so Monday was a pretty rough day from the stock market. Mondays, on average, are typically more aggressive than any other day of the week. Over the course of the weekend, when the market's not open, you have a lot of news events that come out, and when the stock market opens on Monday, it kind of piles up those news events together and pushes them into Monday. So on average, Mondays are pretty aggressive. In the case of today, it's been a lot of talk about the coronavirus as it continues to spread, and people are starting to get more and more worried about it. As a result, we had the worst day in about 2 years as the stock market fell 3.5%. As I've mentioned in pretty much every video for the past month, coronavirus has been the huge topic of discussion. It relates stuff about global panic and media coverage, in addition to stuff about China's economy slowing down and potential slowing of the overall world economy. And so as the coronavirus continues to spread and more cases are being found, I think it's currently sitting around 80,000 total, there's going to be more and more talks about potential recession for the world economy. As I've said in pretty much every video about this topic, I am not worried about this having a long-term effect on the stock market. While I agree that shutting down the world's second largest economy in China has a huge impact on the world economy overall, this is not going to be around forever. I think on the current circumstances of the stock market being so inflated, this news is kind of pulling us back out of the stratosphere. To show how not worried I was about this news about the coronavirus, the only reason I ended up checking the stock market today was because I wanted to see what the predictions for the Macy's earnings that come out this morning were. It's just because I started doing some research on the stock market is the reason that I found that the stock market had such a horrible day today. That is how not worried I am about this current state in the stock market. With the incredible 2019 that we had, it makes sense that stocks are so overextended. When you see the fact that the S&P was up 30% in 2019, when a normal year is between 8 and 10%, you can see how overextended we are right now. When I went through an article from the end of 2019, discussing some of the things that happened during that year and why the stock market rose so much, I've seen a lot of things mentioned for potential worries that investors had in 2019 as being current right now. You have problems in the potential slowing of the world economy with coronavirus. You have global tensions, as we started the year off with the Iran incident, and the idea that the Federal Reserve is not doing a great job, which now the coronavirus is becoming a bigger and bigger topic. There's been a lot of criticism about how they're going to be handling this in the future. And with all that speculation that we had in 2019 and having a 30% year, I don't see any reason to start freaking out now. Until we start seeing some long-term repercussions from the slowing down of the global economy that you can't trace back to coronavirus, I'm going to be holding steady in the market. The stock market drop on Monday brought us back to completely even for the year. And the fact that we've had some incredible drops in February alone, and the fact that we're sitting pretty close to even, has me feeling pretty good and not worried at all. However, with all the volatility that's going on, I will not be making any changes to my portfolio anytime soon. I've talked about potentially selling Starbucks and adding more to my Snapchat position, but just with how volatile things are overall, I will not be buying or selling anything until this kind of gets resolved. Going further off of this horrible day that we had on Monday, I wanted to talk about some of the misguided information that I've been seeing online a lot. Problems with this I've seen on pretty much every aspect of YouTube, but I've been seeing it a lot with the stock market section of YouTube. And that is the big problem of using manipulative numbers to kind of get a point across. Going towards YouTubers, some of the common things that I see on titles have been how much money that they're making a single day of trading, kind of showing, here's how successful I am. I make a lot of money trading stocks. And I've been very adamant since the beginning of my channel talking about how I think it's important to show percentages instead of the dollars that you're making or losing. Because as you start getting people that are young and impressionable watching this platform, seeing that they can make 1,500 days trading on the stock market is not realistic for 99% of people. On all of my videos that I've discussed how much money I'm making, I've always talked about it in percentages because percentages translate across what my portfolio looks like and what anyone else's portfolio looks like. Whereas if you're talking about dollar amounts, making $1,000 a day for me will be like a 50% gain in my portfolio. But for someone that's trading with $100,000, that's not that impressive overall. So just kind of putting the numbers into perspective, I think is really important. That's why I like using percentages, because it gives you a trend over a period of time compared to just using $1 amount. This is something that I saw a lot of today. I saw so many horrible headlines on Twitter that got people really upset and really worried about the state of the stock market right now. One of the news events that I saw was that the stock market had its third worst day in history. But if you do some more searching, they're talking about the amount of points that the Dow Jones dropped. And the other two worst days, yeah, those were in February, not that long ago. So this manipulation of the numbers that these news outlets are using is putting the media into kind of a frenzy about something that the market is not right now. I always say this has always been the case, but with the stock market, as investors start getting more worried about the state of the world economy with all these news about the coronavirus spreading and all those things relating to that, I think it's really important to make sure that you're looking for information that's reliable and not just going off of the main headlines overall. A 3.5% drop in one day is a large move for the stock market, but when you compare it to some of the worst days in stock market history, we are nowhere near that. So seeing that this is the third worst day in stock market history is not a representation of how the market actually reacted today. The market is very inflated right now, and as the stock market has increased over the years, a 1,000-point drop is a lot different than it was 20 years ago. So I would just ask people that they read past the headlines and actually go into the article and see what they're talking about, because there's a million different ways to talk about statistics, and if you want to manipulate them, it's really easy to manipulate. You can do the same thing with stock charts by looking at differing time frames. That's why I try to show a variety of the 5-year, 1 year, and then the couple month, the shorter time frame. Because I can show things that make a stock look really good, or I can show things that make it look really bad. And I'm trying to give a neutral discussion about a topic, and by trying to manipulate my viewers in some way, I think is unethical overall. And finally, I want to talk about Chesapeake Energy, ticker symbol CHK. This is one of the first stock breakdowns I did on this channel back in October, and it's actually one of my most viewed breakdowns. So just based off the fact that people are still searching this video to this day, and the fact that I constantly get comments talking about, oh, what do you think about it at this price? I thought I'd make a part of a video talking about it. So when you look up Chesapeake Energy online, they describe themselves as engaging in hydrocarbon production. And what does that mean? Hydrocarbon is just basically a fancy way of saying that they use fossil fuels. I think just based off of the history that fossil fuels has and the connotation that word has, I think they went towards hydrocarbon because it sounds a lot better than fossil fuels overall. At this point, Chesapeake Energy currently focuses mostly on natural gas, with 75% of the production coming from natural gas. When you look at the energy consumption for the United States, natural gas, I was kind of surprised, is the highest percentage used compared to things like even oil and coal. Natural gas is currently about 32% of the energy used in the United States. When I put up a chart that shows the change in natural gas usage over time, you can see how much more the United States is using than 20 years ago. Chesapeake Energy has been around for decades, and the history of these stock charts is kind of scary to look at. For a company that focuses on energy, which is relatively stable compared to some markets we're talking about, the stock movement has been very aggressive over the years. In the past couple years, the stock market has not been kind of Chesapeake Energy, with currently, in the past year, it's down over 80%. So even in the past couple months, the stock has continued to fall. So for a company that's been around for so long, I wanted to discuss kind of the main reasons why the stock has not been doing well. And the number one reason is the amount of debt that they have. When you go and compare Chesapeake Energy's long-term debt, they've started to slow it down overall, but the problem is their equity in their company has continued to fall. As a result, when you look at the debt to equity ratio of Chesapeake Energy compared to a major energy corporation like Exxon, ticker symbol XOM, currently Exxon is sitting around a debt to equity ratio of 0.13, whereas Chesapeake Energy is sitting around 3. And that just shows the total difference in the state of these two companies. The energy sector has been hit really hard recently as natural gas prices continue to fall. And an article I read that was talking about why people should consider taking up positions in Chesapeake Energy, I kind of wanted to refute those points and kind of talk about why I would stay away from Chesapeake Energy at all costs. In the article, they mentioned the fact that as natural gas eventually will have to recover, Chesapeake Energy will rebound from that. And I say, let's go to the charts and take a look at that. When you look at natural gas and Chesapeake Energy charted together, I have Chesapeake Energy in the orange, you can see that until 2016, they kind of followed a similar path. That is, natural gas went up, Chesapeake Energy also went up. However, the articles mention that if natural gas rebounds, Chesapeake Energy will recover, I think is completely false. If you look at the history of the two of them since 2016, you can see that when natural gas spiked up to around 3 times more than it is right now, Chesapeake Energy was still having a rough time. And what does that mean? Basically, that means that the stock market is not allowing the company to recover as natural gas recovers, meaning that they have enough problems in their company that they are selling off the company even though natural gas prices have been increasing. Back in December, it came out that they got a delisting warning for the New York Stock Exchange, meaning that they were not able to hold a current stock price or an average stock price above $1 for a 30-day period, meaning that they have to change something about their company, most likely a reverse stock split. At this point, it appears like Chesapeake Energy's only option is a reverse stock split, considering they're sitting around 44 cents and they need to break above that $1 mark. A reverse stock split is a way to artificially increase the share price. And by manipulating up to $1, it doesn't fix any of the underlying problems that the company has. And a research study that I found talks about that when reverse stock splits are seen, on average, they are bad for the company overall. You don't see a company rebound after a reverse stock split. So I don't think that the ability for the company to get above $1 will be any reason to consider taking a position. Chesapeake Energy may go bankrupt in the next couple of years or may rebound. However, a lot of the red flags are there and they've been around for a long time. I'm a person who likes taking positions in riskier companies like Snapchat or Macy's, but I've seen some recovery, which is something that you have not seen with Chesapeake Energy. As a result, I will be staying nowhere near it. I will probably still be getting comments asking what my opinion is of the stock, even though I'm making this update video, but let me know what you think about Chesapeake Energy. Do you think that I'm being too harsh? Do you think it has the potential to recover? Or do you think it's going to go bankrupt like I think it might? Also, let me know what you think about the 3rd worst day in stock market history. Actually, no, that's incorrect. Let's talk about the 3.5% drop it had today. And what do you think about the media's coverage of coronavirus and just how the stock market's been moving? Let me know in the comment section down below. Thanks for watching this video, and I'll see you in the next episode.